Andrew, thank you so much for joining us today. It's a pleasure to catch up with you. Let me ask you about the backdrop and demand for resources from here, because there is no doubt the world has turned cautious around tariffs and the potential for it to hit various different markets, also in China where you are right now. Can I ask you about the demand picture? Do you see short-term disruptions because of the tariffs?
Yeah, thank you, Karen. Look, I see caution throughout China, but I don't see a lack of optimism. In fact, I see a very firm, resolute purpose about the Chinese people, about the Chinese leadership. They've, of course, got almost as much cash at bank as the US has debt, so that helps. And they certainly know that they have an administration which is out to pick a fight with them, and they seem to me to be head down, tail up, just trying to keep their own economic growth rolling. First time I've heard them say so concretely, we'll achieve 5%. Now, I know a lot of economies way smaller than China's who'd give their right arm for 5%, let alone an economy this big. So, look, I think it's going super well. They do drop, we hear about 6.5% of their GDP a year through particulate poisoning. They're addressing that. Fortescue's on the front foot with blue skies, green cities through getting green steel rolling here, which will remove that particulate poisoning. So, look, there's still a great deal of optimism around.
Andrew, from the European perspective, I know that Europe is concerned this time round. It does not want to be a dumping ground for excess product that finds its way into the European market. So they're looking at measures to ensure there is some sort of border approach this time round. Do you think that we're in for a tough time, though, when it comes to distortions around steel and aluminium, which, of course, has some bearing too on the iron ore market?
Yeah, look, I see tariffs brought on the Great Depression in the 1930s. It's always a short-term fix. It's meant to translate into tax cuts. There's an economic fallacy with that. So, look, the felt experience by North Americans, I only hope, works out, because tariffs are meant to raise a great deal of money, but they raise a multiple more concern, which hampers consumer expectations, hampers people's view of their own economy, view of their own country, as goods and services start to rise in cost. So we are seeing that in North America. We're seeing that around the world. A tariff war is asinine, it's short term. If you want a bit of a sugar hit, you pull on a tariff war, but after the sugar hit, what then? I do see, though, that there's a maturity in Europe and there's a maturity in Asia that is looking over the horizon. I think Europe, a little like you're seeing in Canada, are really becoming Europe, are really becoming Canada, China really becoming China. I don't like the fragmentation which I see around the world, but I do notice that people are having to really stand up, Karen, to say, hey, we have to, as a continent, we have to, as a country, now really fend for ourselves. We can't rely on the goodwill necessarily of North America, because we're not seeing it anymore. From an Australian perspective, you know, we have US troops on our shores. We issue US passports in Australia itself. This is a really serious thing when we start getting slapped with tariffs by the very country who we so support. So, you know, there's an instability around the world, but it's making Australia stand up. It's making Europe stand up. It's making Asia stand up. And at the end of the day, that'll just make for stronger continents, even though we have fragmentation.